Boom. We are alive, ladies and gentlemen. Thank you all for joining us today. I'm upstairs and outside and enjoying my upstairs office view while we dive in the charts today with you guys. What I wanted to do was go over Bitcoin, just some general sentiments around market behavior, long-term macro perspectives, and probably more importantly, I think just like mastery of self. It's not always easy. It's probably actually the most difficult, but also the most rewarding thing out there. So we're going to start by diving in and make sure everything's functioning smoothly on the charts here. And then what we're going to do is we're going to start with Bitcoin on the daily. Boom, like that. So here's Bitcoin on the daily. The price is marked out by the yellow signature. Currently what we're doing is showing one of our free indicators that you can use called the Bear Claw. You can download that by following us on TradingView underneath scripts. Now, we're going to actually switch into log for a second too. A lot of you guys have asked about these, the differences of why we use log or linear charts. It really depends on where we are in our market cycle focus. So, a lot of people have been talking about the 200-day moving averages, and the 200-day moving average, again, is highlighted by the green, and then we have the 314-day moving average highlighted by the blue here, just down below. I think that it's important to recognize that moving averages are a lagging indicator. They're not a leading indicator. So retrospectively, they're super valuable, but leading the way, not always, especially because depending on what asset you're managing, it changes drastically. A lot of the times with almost any indicator, you get what's known as front running or like self-inducing prophecies. So people see things, they start to follow those, even though they become almost unimportant. So just as a kind of a side point here, I do want to point out that the top of our trading range is around $18,000. And we in the past have seen SOS, like a sign of strength, a break out of the box, and then a return back to the top of the trading range, which would put us around $18,000. Now, a big part of the reason why I don't think that's going to be the case is just there's a big, strong differentiation here between the stock to flow model. So I'll actually go to the stock to flow ratio. So for those of you that don't know, the stock to flow model has been quite accurate for many years now. And generally what we see is a run up of price following below the stock to flow model during the halvening and then a break above. Now we've seen that every time in the past, right? So people will often argue, well, look, we've seen every time it closed below the 200 moving average that's the start of the bear market. Well, yes, per se, but that's a lagging indicator. Here with the stock to flow model, we've always continued to move above the stock to flow model. So that would be the first time that has never happened, right? That would indicate that this bull market being over here doesn't make a whole lot of sense. It's just too much time in between here and the halving. What I do think, though, it very strongly suggests is what we're about to witness is a very long reaccumulation pattern. And generally in any market sentiment, these reaccumulation patterns, well, and bear markets as well, by the way, are designed to bore the average investor. So first and foremost, if we look back at Bitcoin's price history, again in the log chart, just kind of make it easier to see everything inside of this chart, we have only ever gone up, right? Technically speaking, right? So every time Bitcoin's gone up, yes, it's come back down, but only relatively speaking. So here between 2013 and 2017, we only went up and then came back down slightly. There's an argument to make here that Bitcoin has always been in a bull market with times where it's better to accumulate with less risk on the table. And that's what we do by looking at the stock to flow model as well as the reserve risk ratio. So the reserve risk ratio is another great one here, shortened to call it the RR. And as we zoom in, you can see that we're actually approaching an area of almost no risk to acquire Bitcoin. Like if Bitcoin comes back down to the $12,000 price, there is no risk there at all. And although I don't think that's likely, because I've talked to a few big key interests who are accumulating at these levels, this represents the greatest time to buy Bitcoin back since it was around $11,000, at least in terms of the risk to hold relationship that is on the table right now. And if we scroll back, again, all bull markets, we've seen the reserve risk ratio jet up into the top before the bull market is considered finished. And that's for a considerable period of time. This would be, again, the first time that that has not happened. Now, in 2019, when the market price ran up to around $12,000, $13,000, if you go look at my videos, one of the reasons why I wasn't convinced that this was the start of the bull market is it just didn't indicate any area of reaccumulation that we had seen in the past, and those are hyper important. So if we take off the log chart and we go back to the single Bitcoin chart that we've been following for over, what is this, 2 years? Or, yeah, sorry, over a year now? 2 years, geez. I wish time would fly. We'll go look at the daily. And so although this chart is a little dirty, please understand that I drew it once and it has not changed since we drew it. So here we can see on the left-hand side the general buying sentiment of accumulation and then distribution. And there's two accumulation areas. Number one, the first primary area of accumulation that we charted here. And then number two, the larger accumulation, which is the top of the trading range around $20,000. Now, again, often we have seen SOS signals and backup phases come back to around the top of the box. But if we take last year, or not the last bull market as an analog, what we do see is after we broke out of the box, what we have is this massive area of reaccumulation that took place on the previous two regression lines. And this is what I think we're witnessing now, although the only difference is I do not believe we're going to get a snapback or what a lot of people are calling a V-shaped recovery. What I do believe is that we're going to get a much more talented and interested investor here that are able to basically move the price and shake out as many weak hands as they possibly can between the $30,000 and the $42,000 area, likely for about a month or two. I suspect that this will be the strong indicator that we are reaccumulating above this particular trading range. Now, I've stood by this sentiment for quite some time. Sadly, we did get what I didn't want, which was this drop back below 30,000. You can look at a bunch of my videos where we talked about this looking very identical to distribution and the difficulties between understanding distribution and then reaccumulation. So right now, I believe we are in an area of reaccumulation. You have to remember is that there are billions of dollars of Bitcoin that started to accumulate in this area, and it's noticeable by this large VPVR signal on the right-hand side. So while everybody gets scared and talks about Bitcoin going down to $20,000, I believe what we're going to see is this shake-around moment with a spring likely to around $29,000, maybe even $28,000, and probably between July and August will continue upwards. I don't believe that this will be a giant V-shaped recovery because the goal of these reaccumulation areas is to get rid of the average investor by boring them, right? And that's a key indicator. So we did see some strong signals for breakdown here. We went over this in our videos prior, back in the beginning of May, that it could go either way at this moment. And again, one of the other reasons why I don't believe that this is the end of the bull market is you just didn't see the upthrust demand that normally signifies the bull market and the extraordinary amount of buying power that took place when we dropped into this $35,000 range. This is billions upon billions upon billions of dollars accumulating Bitcoin. We're talking about hundreds of thousands of Bitcoin coming into the market and being chewed up quite quickly. So again, I think it's important to understand that there's a lot of market sentiment that confuses ideas, right? For the moving averages, I think, is another great one of those ideas where they're a lagging indicator, not a leading indicator, right? So for us, we've had the leading indicators like regression lines drawn for a long time now. And as you can see, as soon as we broke that $47,000 area, we came down and actually tested the lower regression area at $49,000. This becomes much clearer when we use the wicks, and you can see the wick both touching the 314-day as well as the regression line from our previous automatic rally. This again is identical to what we saw in 2017 bull market relationship to the 2013 buying climax of $1,000 approximately. So what does this mean? This means in my mind that right now what you're going to witness is extraordinary amounts of FUD and misunderstanding of general market sentiments that are just basically there to push out the average investor. Let's make a longer story short by looking back in 2017 and then just say, hey, look, let's pretend that the bull market is actually over just for shits and giggles sake. That you're new here. You're new as an investor. You're new in the trading world as well. Let's say you bought right at the top of 2013. You made the worst mistake ever approximately. The problem is that that moment, what you're doing is misunderstanding the value of your investment versus the price. Let's say you spent $10,000 up here. You bought 10 Bitcoin at that particular moment. Now, if you got scared and you sold here because you confused price for value, you probably never made it back into the market and you did not get to enjoy the run up to 20,000 and then up to 60,000. So you missed out completely. But if you're a smart investor, what you end up doing is just buying consistently on a month-over-month or quarterly basis and basically ignore the price, understanding that Bitcoin is extremely valuable as a digital asset, the first of its kind as a collector's item to some degree, and having the prospectus of knowing the background, basically just continuing to accumulate is the smartest way to go, because even though you bought 10 here at 1,000, you got to buy 10 more here at only at significantly cheaper price, right? So you got to buy 10 Bitcoin for $3,000 instead of 10 Bitcoin for $10,000. So what you end up doing is averaging your price out to around the approximation of the midway of the trading range. And this is what all good investors do. They don't try to time the market perfectly. You can go back and watch all of our videos. So let's say we're wrong, that, oh, that was the end of the bull market. And again, I do not think that is the case. The best thing always to do is continue to accumulate. You can actually look, Grayscale was still buying in these areas, just not a whole lot. Right? They continued to buy here, they continued to buy here, they probably bought a shit ton here, right? Because there's key moments when you can go, oh yeah, this is actually below the middle of our trading range. Anything below $6,000 is a steal to us. And generally these big players know how to play the market quite well. So they look at the reserve risk ratio, they go, well, this is fantastic. Bitcoin is in a great area to accumulate still here. In fact, the RR right now is equivalent to where we were in pre-bull market breakouts. Let's go. So let's, for fun, we'll take a look. I do know that Grayscale has been consistently selling around 100 Bitcoin per day. They accumulated a massive amount, around $30,000 in the beginning of January. Here you can see they went from 649,000 and then they bought, and this is at approximately $37,000, and then they bought another 30,000 Bitcoin, which pumped them up. And they've been selling every day about 100 Bitcoin since. So the big players are distributing here in these levels. In fact, they started distributing every day since February. And there's a reason for that. Is because right now we know that this bull market is not going to just explode into madness the way that it did in 2017, because you have a significantly more intelligent investor. They know how to accumulate and distribute to keep the prices within the range that they're interested in. And this stock to flow model is likely going to be slower at this particular rate. So we go back, we look at the stock to flow ratio. We generally understand that this is the cost to produce Bitcoin. And you can see that both kind of areas below, we dropped significantly below the stock to flow model before moving up. Now, I don't believe that the bull market is over. And in fact, again, I will repeat this. I believe we're about to get a 2 to 3 month extra area of accumulation that is designed to bore out the average person who does not understand that you should be accumulating value and almost ignore the price. Unless you already own 60,000 or 650,000 Bitcoin like Grayscale does, that's a different story. I bet you in the next 2 weeks, you're going to see Michael Saylor come out and say, hey, look, we bought another $15 million in Bitcoin, because he's playing the strategy correctly, which is to accumulate, basically ignore the price, and just set a monthly strategy. And that's how the big players play this game. Now, again, Michael Saylor and MicroStrategy also happened to accumulate an enormous amount of Bitcoin before the bull market started. And yes, timing is important. It's not everything, because you can still play the investor game properly if you understand what the value of your asset is to begin with. I don't sell my house. Look, I don't sell my house here just because the price may have dropped in 2008. That sounds silly. What I do is I continue to accumulate assets and use them to better my position throughout time. So I hope that's valuable. I'll go take a quick run through. I don't suspect that this bull market is over. I do think that what we're about to witness is just an extreme period of boredom right now, designed to get rid of the average retail investor who has the attention span not long enough to understand that this is a multi-decade cycle that we're still looking forward to. And we're going to be probably running up into these exponential moving averages here through the trading range. Now, if we see a clear break below the trading range and a fail, well, then yes, we could come lower. I just don't see how that's possible when you have billions of dollars of Bitcoin being accumulated in these areas today and in the past, right? So, and the distribution level here is starting to decrease too. So we see a buying decrease, but also that's likely intelligent spending. If you listen to Michael Saylor, if you listen to Elon Musk, you would understand that they're not buying huge sums at any given price. What they do is they set bots, usually below the middle of the trading range, and they accumulate anything below the bottom of the box or near the bottom of the box here to not drive the price up significantly during their accumulation period. And that's what I believe we're witnessing right now. You can also see an increased price spread at this particular moment on decreased supply. This is another important signature of the bull market likely continuing. So there are a bunch of indicators in my mind that even though, yes, we're not going to have a V-shaped recovery, we are going to have a recovery and a breakout to higher highs in the next 2 months, most likely. Now, I probably, again, I go out to the daily, it'll look a little clearer here. We will probably bounce between the 200 and the 314-day moving average, which, again, fits our trading range perfectly right here before we continue much higher. Remember that moving averages are lagging indicators, not leading indicators. We have had these regression lines as leading indicators drawn well before we dropped below them and well before we bounced above them. That's what a leading indicator looks like, and is much more valuable than the lagging indicators of the moving averages themselves. So keep that in mind. I want to go over a few other things that I think are valuable. First off, the amount of selling pressure down at the bottom here, and our RSI basically has just dropped to nothing. Avalanche at $17 here, in my opinion, is an absolute steal. It is brilliant technology. And again, what we're seeing is a reaccumulation, probably, at least as far as I can see, in between two of the key trading ranges in both of our breakout from $12 and this move back down below. And we're filling this nice gap here in the trading range. There's too many bullish things taking place in this ecosystem to assume it's done as well. Like, we have not even seen the real headwinds come in. The U.S. government is about to print trillions of more dollars. And we've hit some pretty stable bottoms for some of our other interests. Band, for instance, our primary investments were made back here at the bottom of this trading range. We broke out and slammed right back down to the bottom of the trading range. Again, sorry for the messy charts. There's way too many things. What sucks is that TradingView doesn't seem to remember that I close all these things and try to turn them off, so it just keeps opening them anyways. There we go. So we hit the top level of resistance for band, and then we've shoved right back down to the bottom of the trading range here effectively too. And then look at the supply signature for band right now, which was extraordinary amounts of buying pressure came in. And this to me does not represent the end of the bull market. You would see significant sell pressure, not buy pressure, if we were finalizing the bull market. And that's what we see across the board. The other thing too is that the NASDAQ has broken into new all-time highs since this drop, which again is showing strength in the relative general markets. The VIX today staying quite low still, again with the fact that we are still in the middle of a pandemic and so many unknown unknowns in front of us. We could see higher spikes of this price or of the VIX, but for now we are in an area of low and decreasing volatility. The other thing I'd like to do is just quickly take a look at the S&P 500, where we are near the top of the trading range and forming what appears to be a new reaccumulation zone. With how much money they're going to print, I like the quote, they're printing like there's no tomorrow, probably because there is no tomorrow for the dollar. And what you should then understand is that assets like Bitcoin represent an extraordinary opportunity where all US dollars are going to be printed into massive amounts of inflation. Therefore, you should not want to hold on to US dollars, and assets are a better investment. Therefore, if you understand the value of Bitcoin, you will basically ignore its price and you will continue along your way in what is the best investment strategy, which is not trying to time the market and just playing in it consistently. And just to kind of finalize here, we are now at $37,000, continuing to move up. And I bet we're going to run into the top of the trading range here around $42,000. I'll get rid of my moving averages here of the Bear Claw. Again, you can download that for free, and we will look at our Bollinger Band. We have stayed in our band range here, and we're moving up to the point of control. Again, this is the midway point of this particular trading range, which we are going to want to see build a significant amount of buy and sell pressure around. Because remember, these big players are not just buying a shit ton all at once. What they do is they have small buy orders that go through in pretty much everything below the point of control, or the POC here, this red line. So anyways, I hope that was valuable for you guys. Steal with the Arcane Bear. Thank you all for joining us. Remember to give us a thumbs up if you like this content. We really appreciate your guys' support. Give us the thumbs up. Yep, do it. Give us those thumbs up. Let's take a look at a few of your guys' questions and thoughts. As long as it takes to bore the average retail investor. Yep, that's my general sentiment for this, where we are right now. As long as it takes to bore and confuse them. I do not believe this is a... most YouTubers, I believe... Well, look, I don't know. I could be wrong here. I'm just using the general technical and fundamental analysis that I see. I think that this is a great area to accumulate Bitcoin. I have friends that are in a fairly significant amount of accumulation right now, but again, they're doing it in trying to catch those bottoms along that trading range that we just went over. So they don't want to force the market up too quickly. They want to try to accumulate as many Bitcoin from retail hands who are getting scared as possible. This cycle has repeated itself longer than anyone has been alive. So yes, I think it'll be as long as it takes to bore people and confuse them. Centurion84 says, I can see there being a W forming. I try to ignore anything like that. We focus on horizontal trading ranges only and ignore pattern ranges because they can be very deceiving. And the last thing you want to do is be deceived. For instance, someone the other day in our private group was asking about Ethereum, and they're like, oh, look, see, Ethereum is in this pennant. Let's go. I'll show you what they were trying to talk about. They're like, see, Ethereum is in this pennant, and it could break down. It could break down easily because there's this line here. Well, yeah, but there's a supply line here too. Generally, what we want to try to do is focus on the larger trading ranges. It just makes a lot more sense on the long term. And Ethereum has done the exact same thing as Bitcoin, which it has now returned to its uppermost regression line, formulating what I believe to be the finalization of the SOS and the first backup within this market cycle. So we're not going to recover right away by any means. This is going to take some time. Oh, where did my other Ethereum chart go? Let's see here. Dang. I don't remember where my other Ethereum chart went. Gonna have to find it later. Don't have time for that right now. But again, first off, we are up very high from our original accumulation area of around $390. So do not forget that. This is a much higher risk area than we were in the beginning of the pandemic. I'm much more confident about Bitcoin than I am Ethereum, because Ethereum can be easily replaced still, I believe. Could be wrong. I just don't think it's old enough to say that it's for sure a winner yet. Technology gets replaced all the time very quickly. We've seen it in every industry. Don't get too attached to technology that can change so quickly. But Bitcoin, I am much more confident about at this point. You just have hundreds of billions of dollars locked up in understanding there. And again, I think Ethereum is a good investment. It's just riskier, period. That's my general sentiment around Ethereum. Let's see. Volume is low, captions are working for me. Oh, sorry guys, I didn't realize the volume was so low. I could have turned it up, I guess. It's always difficult when I'm changing computers, and Skype always seems to pick up the volume. I apologize for that. Yeah, input, Jesus. Well, I'm sorry guys, yeah, that sucks. I apologize for that. There, that should be better now. Ryan Tower says, Tio, I really appreciate your content. I've never been able to relate to anyone in crypto so much. Have fun in Bali. Thank you for that. When the MACD rolls over on the weekly chart, isn't it the start of a bear run? No. You can't use indicators like that. They're designed to trick people. Watch them be wrong. What do you think about the 40 million AVAX tokens getting unlocked in June? Oh, interesting. I don't think that's actually true. Avalanche has been unlocked every 3 months if you look at its distribution phase. So we've seen that distribution come out frequently. If you have that data, please drop it in the chart or please send it to Arcane Bear, info@arcanebear.com, so we can take a look. But from what I understand, the distribution takes place every 90 days anyways. Doesn't a Bitcoin bear run begin with the MACD rollover? No, that's not true. These are lagging indicators. You can't use lagging indicators. They're helpful to understand sentiment, at least on a time frame, but we have too many other bullish indicators in the fundamentals prospectus of how we get to $100,000. So again, I believe this is going to be a 2 to 3 month time frame where we go through and just basically bore the average investor. What do you think about Wyckoff accumulations pattern? Yeah, we have already gone over that. We've been studying Wyckoff in our group for a year and a half now. Again, you can, if you would like to, you can go check out arcanebear.com. We're probably one of the only ones that has our own custom Wyckoff accumulation and distribution charts already. Oh yeah, we're not logged in right now. The Wyckoff, it's going to tell me to log in anyways. We won't open that up, but I'm sure we're one of the only ones that has that. It's our favorite form. It gets rid of a lot of noise and a lot of data. It's a great way to go. Thoughts on XRP? I don't have any thoughts about it. I don't hold it. Be great to meet up in Bali. Sure, I look forward to it. Okay, awesome. Well, thank you guys all for joining us today. I had a lot of fun. Everyone goes bullish and then bearish too quickly. Their macro perspective is usually off. A lot of the people that are on YouTube talking now are new. For instance, I'm not new here. We're not popular mostly because I'm kind of an asshole to people on purpose and try to keep the quality high. So I make dick statements that are designed to get rid of frilly, shilly, hype people. We're long-term value investors. It's very different than hype. It's a much different strategy, and it consistently works out and has worked out to our advantage by playing that. JW says, you were going to wait out these 2 months of sideways action with great food and Asian ladies. Yeah, I'm super excited. I'm really hoping Bitcoin does basically nothing but bore people between 29 and 42,000 so I can go camping and go to the hot springs for a little bit. So yeah, we're headed off to Bali in 2 weeks because of this. What do you think about the Fetch tech? We've been invested in Fetch since early 2018. Hope you enjoy Bali. Bear Den Jerry says, thank you, Tio. Thank you, Bear Den Jerry. It's good to see you and JW in the chat today. Think long term. You're awesome. Well, we'll leave it at that. Thank you guys all for joining us. I'm going to leave you with this beautiful view at my desk right now because I know I love enjoying it, so I'm going to assume you guys love to enjoy it as well. Just want to leave one thing clear. This is not financial advice. I'm just sharing my general thoughts and my own understanding of learning and as we go. There's no getting everything right in life. So I think the best thing to do is have that macro perspective of what investments look like if you continue to repeat the process, understanding that the dollars are being inflated on every country's continent consistently for the last 50 to 60 years, since 1960, let's say 40 to 50 years, pretty easily. So assets have continued to increase, and that will likely be the long-term story as well. So take a look at the view here. We love you guys, and we'll see you again on the next episode.
Playing from Galaxy S20 Plus. Playing from Galaxy S20 Plus.
Don't ruin it, Alexa.